Hey all, welcome to ShareTreck. Good morning. This is the 21st of June 2022. Yesterday was a trading holiday, so this is going to be the first trading day of this week. Let us see what the market holds in store for us. Let's get started with our daily update. Well, this is the segment where I talk about overall conditions and initial outlook. And today I don't have any news article that I want to present to you. I checked and scanned all of them. And over the last 2 days, I've had more time to look at all indicators and news reports and opinions. And my perspective right now is that whatever green we are seeing in the future is just a momentary green. It's all going to slip back again. And this will all become much more clearer when we go to our next segment, which is NASDAQ and technical indicators that we're going to look at. And I'll explain to you in more detail why I think so. But overall, if you look around, you see that we are regressing both environment-wise, both economics and quality of living-wise because of this Russia-Ukraine crisis and because of the COVID pandemic. And most of the risks that we have been talking about right from, I would say, 3 months ago are still intact. There is not much change. There is a little bit of easing of supply chain, but not significant enough to impact the inflation and reduce the inflation. So with that said, let's go and have a look at NASDAQ, VIX, and the other indicators. Let's start off by looking at NASDAQ futures first. NASDAQ futures are looking good. They are up 1.43%. It's in the green, 161.75 points. And our MACD is still bearish and momentum is picking up sharply. We are still being supported by this diagonal line. However, we are going to have immediate resistance from the 9-day exponential moving average, which is this red line that you see here. So that's going to be the first point of resistance. That stands at around 11634.11. So we have to be careful with that. And we also have to remember that all the other risk factors are not yet mitigated. So this could be a temporary relief rally after a lot of beatings that we have taken so far. We need to keep that in mind. Next, let us go and look at indicators. And the first thing I'm going to do is look at oil. Oil is still continuing to go up. It's gone up marginally by 0.22%. And we still have this diagonal line of resistance out here, which should act to push it down. And we also have the 50-day exponential moving average out here, which is giving a lot of resistance to oil. So if these two hold, we are going to be fine for NASDAQ in the short term. But if we break through these things and go up, then it's going to be really bad for NASDAQ. So all the green that we are seeing, we should always put it in the context of what's happening with oil and what's happening with other indicators. Let us go and have a look at US dollar index. US dollar index indicates the flow of funds, and people are finding much more refuge in the US dollar as compared to other currencies where there is inflation and other geopolitical risks. So we can see that today again we are having a positive gain of 0.03%. And also, if you notice, there's a clear cup and handle pattern forming for US dollar index, and I have plotted this 13,006 to be the level up to which US dollar index can spike, which will break through our previous highs. And if that happens, whenever US dollar index goes up, it takes money out of gold, cryptocurrency, NASDAQ, S&P 500, everywhere. And that's the reason why I'm still wary of the rallies that we are seeing right now. I think they are bear market rallies and they will fizzle out in due course. Now, if we go to the put-call ratio, you will see that there's extreme bearish sentiment. It's at 2.90 as of yesterday, as of the last trading day, which was Friday. We have never been this high. So there could also be some kind of short squeeze that could potentially take place to neutralize this. But things are looking pretty volatile. And now let us go and have a look at our 10-year yields. 10-year yields are continuing to go up, and they have broken through the resistance that we had out here of 3.282. And whenever the yields go up, that seems to be much better for stocks. But at this point of time, because the yields are going up and the US dollar index has gone up, I don't think stocks are likely to benefit in a sustained manner. Now let us go and have a look at the QQQ and see what's happening out there. We are recording it around 8 o'clock in the morning, and the QQQ is at 278 pre-market. That is up 1.20%. So this is a very healthy bounce for QQQ. So we have been able to get support from 274 from this line of support, 273.52, and we are above it. So this is going to continue to perform the role of a support today, it seems, because pre-market we are way above that, but we are still going to face our resistance from the 9-day exponential moving average, which is this red line out here, and it currently sits at 284.21. So we have got a very, very slim jump ahead of us, and then we are likely to be pushed back down again because MACD is bearish and momentum is below average and just about picking up. So this momentum is not as reliable. I'll find more comfort if it's above average and picking up. Then I would say that, yeah, we can be guaranteed that upward movement is taking place. So with that said, let us look at S&P 500. S&P 500 is also showing a positive gain of 1.32% pre-market at around 8 o'clock, 8:10 in the morning. So we are still able to withstand the support from 369.94. It's holding up and it's pushing us up again. And here the 9-day exponential moving average is pretty far away. So we have got plenty of moves upward for S&P 500, and it broke through the resistance that happened yesterday at 369.94. I have not yet marked it as resistance because today pre-market I can already see that we are above that. But the next resistance out here is going to be at 376.38, which is going to be a minor resistance. And then we are going to look at this resistance out here at around 382.05, which is the 9-day exponential moving average. So I think the biggest challenge is going to come from the 9-day exponential moving average. Having said that, I would like to go and have a look at gold and crypto and see what is happening in those markets. So let us start off with gold first. The gold prices have been falling and they have not been able to break through the resistance at 1841.26, and also they have not been able to break the resistance of the 9-day and the 20-day exponential moving average, which is the red line and the orange line respectively. 9-day is sitting at 1839.27. and the 20-day exponential moving average is sitting at 1844.33. So these two are giving formidable resistance to gold. And gold, even though has got a bullish MACD, it's a bit weak on the momentum as such. And also remember, US dollar index is showing that funds are going into US dollar area, and therefore they are moving out of assets like crypto and all. So gold has definitely suffered. Let us look at crypto. Crypto has gained, and I think this gain is not because of anything other than the fact that we went through the trauma of going as close to 17,000 as possible, and then we bounced back during the long weekend. And we are right now holding up above this level of support, which is at 20,233.7. At one point during the weekend, Bitcoin had gone below the cost of mining, which meant that most of the Bitcoin miners would have been unprofitable. So we have had a real trauma out here, and we have bounced back again. We have still got a very weak MACD, which is bearish, and we still have very weak momentum out here. So I'm still going to hold on. I still think that we may touch 16,527 sometime soon. So with that said, I would like to go and have a look at our genomic shares. So here we are looking at our genomic shares. Allogene gained the most on Friday, and it had the biggest candle. And now I'm going to convert this resistance into a support. So we have a support out here. However, we do have some resistance for Allogene to consider. Our next resistance is going to be at 11.98 for Allogene, and we have the support from all the exponential moving averages. So that's really good for Allogene, and Allogene has also got a bullish MACD, and momentum is the only thing that worries me. We are in the overbought area, and therefore there is going to be some amount of sideways movement today. That's my call on Allogene. That's what it seems. Bluebird is up 16.36%. 3-4% as of Friday evening. And we have just about begun to pierce the horizontal line of resistance, which is at 3.80. This is still performing resistance out here. We'll have to see what happens today. And pre-market, we are at 3.67. This would be a right time to probably sell a call on Allogene, assuming that you bought it somewhere around 3.10 or some price like that. So that would form the trading strategy that we had, because I'm sure that the overall market, even though it is showing a bit of bullishness, it's likely to come down. So I would probably look at booking a call here for Bluebird at as high a price as I can get, and then wait for it to fall back down and then buy back the call and cancel it out. So that could be one play I would look at. Of course, this is not financial advice. This is just my personal opinion. Please do your own due diligence before making any transactions. Verve also has gained 13.56 as of Friday. It's looking pretty good out here on the charts because MACD is tending to go towards the signal line and crossing over. And we still have got this resistance out here, which was the earlier support line below which we fell. So we need to break through over that. And pre-market, there are no trades yet as such. And also, the only thing I'm concerned here is that the momentum is below average and flat. If the momentum improves in the morning, then there could be a slight bit of bounce. And if we manage to come above this line of support and stay there, then I think that we would still have another candidate in the genomic sector in which we can do some amount of day or swing trading, because then we can expect to be within these two ranges and be able to buy and sell in a more or less predictable fashion. Of course, again, the word of caution is that the VIX is at all-time high, so volatility is high. And when volatility is high, doing any kind of swing or day trading is very, very risky. So I'll caution everyone about that. And then we have Editas, which has come up 11.1% on Friday. And again, we have this trading range within which we can trade. Right now, it is in the middle. So upward and downward potential is evenly balanced. But as it goes up further, the chances of it coming down becomes much higher. And therefore, if you are already holding it, then you could put a call on it and hope to buy it back when it comes down. The MACD is crossing over the signal line, but the momentum is facing downwards. So today, if we have a relief rally coming up, then there is a chance that Editas might gain a little, but eventually it might have to come down because it's still facing resistance from the 50-day exponential moving average, which is sitting at 11.52. So that said, I think overall the genomic sector is a risk-on sector. So as people get skittish, they are likely to give up the gains that we have seen here. So I think all the shares in here which have got more of dividends coming in, which have established a track record of products that bring revenue and profitability, those are the ones that are going to be the flavor of the day, because most analysts on Wall Street are advising their clients to go for quality stocks with quality dividends and quality revenue streams. And therefore, I think the likes of Pfizer, Novartis are going to do much better than others in our watch list out here. And we'll have to wait and see how all the risks resolve themselves in the market in order to see any consistent bull movement in the market. So that brings me to an end of this session. Of course, this is a very different format than what we usually have. But I thought that putting the effort onto the news items today was not worth much of it, because most of the people are anxious to find out what's going to happen today. So there is not much definitive news out there which I can pick up on and talk about. But overall, let me assure you that we are still not out of the woods. It may seem like a bit of optimism when you see everything green, but please don't get carried away by it. Be careful when you do your trades. We are in a very highly volatile environment, and also the swing and day trading opportunities I spoke to you about, those are my wishful thinking, I believe, because even if I did put money on those trades, my risk would be very, very high because VIX is at an all-time high. Now, I want to go back to VIX and show you my reason why I think this rally is not going to be sustained. So let us look at the VIX out here. And I'm going to zoom out, and I have identified 40.03 as the resistance that we need to pierce in terms of VIX in order to have capitulation of the sellers. If you look at all the past turnarounds, we have gone up there and come back down, and then things have improved. And that's the same case when it comes to 19th of August 2015, then when it comes to 5th of February 2018. And the longest time that we have been out there was from 25th February all the way to 12th of May 2020, when we had really, really bad markets. And after that, we came down. Right now, I think some expert traders and investors might be doing sector rotations, which is what gives you greens on an ongoing basis, moving from growth to staples, and staples to growth, and risk on to risk off. Doing all those things, they are able to recover some profits and put it towards the capital loss that they have accrued. Probably they are trying to bail themselves out that way. But until we pierce this 40.03, there wouldn't have been a seller capitulation. So we need to see that happen. I'm not rooting for bad times in the market, but I'm saying that unless we pierce through 40.03, we are not going to have a sustained bull rally. And for the bull rally to happen, we need to go up there and start coming down like we did out here. The VIX has to start coming down, and we need to go below 20 in order for us to have a reasonable market, which is respecting all technicals and is more predictable. So that's the reason why, my friends, I'm saying that the rally that we are seeing right now may not last. That's the reason why I'm saying that. So with that, I would like to end this session. I hope you liked this video. If you did, please press a like out there. It helps YouTube promote our channel and get us new viewers. And if you have not yet subscribed, please subscribe and join our community to help us grow this channel. Thanks and have a great day. Bye for now.